Open up the champagne, pop. It's my house, come on, turn it up. Hear a knock on the door and the night begins. Cause we've done this before, so you come on in. Make yourself at my home, tell me where you been. Pour yourself something cold, baby, cheers to this. Pour yourself something cold, baby, cheers to this.
Hello, my name is Angela Briante with Briante Realty Group. Welcome to Talking Real Estate with Angela. I have a guest on the show today. It's Robert Dominguez with Valley National. He's a home loan consultant. So if you would please introduce yourself.
Thanks, Angela. I appreciate the opportunity to be here. I wish you a lot of luck with your new show.
Thank you.
So I am a home loan consultant with Valley National Bank, and we are located in Wayne, New Jersey. We have currently about 240 branches throughout the Eastern Seaboard, about a $30 billion bank.
Wow. Wow. And how long have you been in the industry?
Well, housing about 35 years.
Wow.
I'm that old.
Okay.
And now in mortgages exclusively about 20 years.
Okay. Wonderful. And thank you again for being here. It's,
You're very welcome.
We've known each other a long time. You're very well respected in the industry. So, you know, having you here as a guest is certainly an honor. There's a question that I've been asked many, many times, being a real estate professional, by buyers and also sellers, because they want to make sure that any buyer presenting an offer on their home is qualified. So the question has come up on both sides. What is the difference between a pre-approval and a pre-qual letter? Because those two names are used interchangeably, and I know there's a big difference. So could you speak to that?
Absolutely. It's a great question, by the way.
Okay.
I get that as I get that quite a bit. So I like to say that in the short, a pre-qualification, or sometimes what we call a pre-qual, is really for the buyer, so that the buyer knows what they can do. A pre-approval is so that the seller knows what that buyer can do.
Okay.
What I mean by that is that generally when I'm working with somebody, if we're looking for just going that first stage, a pre-qualification, I will discuss income, their assets, look at different programs, and I'll let them know what their affordability is and what it would take to close on that transaction. And I'll issue a pre-qualification letter.
Okay.
That's generally what you as a realtor would go out and start showing homes with.
Sure.
Where sometimes you'll get into a market where it's a little bit more competitive, such as what we're in now.
Sure.
And a buyer goes out there with a pre-qualification letter, but they might be competing against somebody who's taken a little bit extra time now to hand in documentation on the income, the assets, have an underwriter review it. And that's the pre-approval stage. So it's really more of a now commitment from us as a lender to go ahead and extend the loan to this buyer.
Sure.
And it's just a little bit more security for that person, that they're able to actually get the mortgage, and certainly for a seller who's looking to then take their property off the market for 6 to 8 weeks to know that this person can actually go ahead and complete the transaction.
Sure. You know, we've all, I know we've seen it, and I'm sure you have many times, that, you know, things are approved or qualified, but things can change. So it's important to, you know, work with a lender that, you know, truly is, you know, qualifying the individual for the purchase.
That's right.
That's great. So I actually did some research, and there was something that I found quite interesting, and I'll just read it. It was in a real estate publication called Inman, and it said, after a 12-year decline, the U.S. homeownership rate rose in 2017 and 2018 to 64.4%, rising most among millennials aged 25 to 39. So I found that interesting. Is that the majority of your, I know you have a large spectrum of ages and clients that you work with, but it was interesting to see that the millennials between 25 and 39 really have such a surge in the statistic.
Absolutely, it makes a lot of sense to me.
Okay.
From where I stand, and I do work with a broad spectrum of people, but what I'm seeing the most in purchases, certainly the first-time home buyer market, which is pretty big, are the millennials. You know, it's kind of interesting to see now.
It is. I always thought with the college debt and everything, and then I know we were speaking, one day you said that there's programs out there with certain physicians or medical students, that there's different avenues that they're able to take the next step in terms of
That's right.
Purchasing.
There are a lot of great programs out there now, and
Okay.
with the millennials coming to the market now, probably one of the biggest challenges is which mortgage type, what can fit their needs.
Okay.
So there are many different programs that are perfect for a first-time home buyer.
Okay.
3% down. There's even a 0% down program. There's a couple of those.
Is that the USDA loan?
That's right.
Yes, that's almost like a hidden gem.
That's right,
We've heard
that's
about
right.
that. And certain areas would be approved for that, whereas certain areas are not as well. So it's based on.
That's correct.
geography.
There's geographic restrictions, if you would, for the program, but it's a great
Okay.
program for the folks that it works for. It's kind of similar to the way a VA loan works in terms of the financial aspect of it, where you don't have to do a down payment. So 0 down payment. There still are closing costs.
Okay.
A lot of times I'll get customers who say, hey, I'd
Okay.
love either a VA loan or USDA loan, 0%
Right.
down. And that's great even if we can qualify them for that mortgage, but then we've got to talk about closing cost.
Right.
Which is a whole nother
That is.
topic.
That's a big topic. Do you see a lot of the closing costs being rolled into the loan with concessions, or what do you see more
That's
and
a
more
good
of
question.
and less and less of?
We see a lot.
Okay.
Seller's concession, as the real estate community calls it. On the banking side, we tend to call it more of a contribution. So a seller's contribution is very common, because what we're finding is, some of these programs that exist out there are fantastic for allowing a person to get in with lower down payments, but closing costs,
Right, and the
are
rates
still
being
pretty
as low
expensive.
as they are. Yeah,
Yeah,
makes sense.
average closing costs, though, we're looking at, anywhere from 5 to 6%. So how do you make that happen?
Right.
And generally, we'll talk about different strategies, different ways that you can close that gap, because the affordability aspect of it is one thing. So there's programs that allow a first-time home buyer to qualify if you're carrying a little bit more debt. You mentioned earlier medical professionals. We have a lot of hospitals in this area. It's a market that's certainly growing here locally. We're seeing a lot of new hospitals, a lot of merging of groups, so a lot more doctors. We are one of the lenders that has a medical professional program. That a unique attribute to that loan is that we will actually exclude the payments from the medical schools.
Wow.
And they're qualifying.
Yeah.
So now, of course, they'll still have to pay that
Right,
debt, but
right.
we're not going to look at that.
Okay.
That's a pretty good
because
program.
the income should
right.
far surpass that. It's certainly, at least from what we're seeing in this area, it's certainly a seller's market. So that's great for sellers out there. I did also read that the Harvard Joint Center for Housing Studies did some analysis. It was quite recent. And they found that 1.2 million new housing units were constructed last year, which was keeping pace with the new households. However, the center estimated that there should be 1.5 million new house units to keep up with the replacement of older homes. So certainly a seller's market. Also, the demand for second homes was brought up in this analysis. And I'm just wondering what you see in terms of interest rates and the seller's market. Like, what does that snapshot look like from being a mortgage lender?
Well, I'll tell you, in terms of that statistic, it makes a lot of sense. That pretty much tells us what we're experiencing now, that
Right.
you'll have a home that goes on the market and days later there's multiple offers.
Yes.
Because, you've got, I think you said 1.2 million buyers or thereabouts,
Yeah, right.
an equal amount of homes.
Right.
You would think that, okay, there's a person for every home.
Right.
But sometimes there's more people
Right.
shopping for that
Sure.
home, and that's how you end up where we are now, a seller's market. So I find that really you need to be very competitive, very strong with your, not just getting pre-approved, but having a very good structure to your transaction, the most down
Sure.
payment you can. You mentioned seller concessions earlier. Sometimes that can be viewed in different ways from the seller. It may
Sure.
look like the borrower is not as strong. So we'll talk about different strategies, for that. But yeah, it makes a lot of sense to me in terms of being a seller's market
Sure.
with those statistics.
It sure is. What do you feel interest rates are doing?
Interest rates are pretty stable.
Okay.
Right now, we are actually sitting about 0.75% lower than where we were about a year ago. So what we're seeing is actually quite a bit of refinances going
Okay.
on. Folks that I put into a new mortgage for a purchase a year and a half ago are calling me saying, does it make sense
Wow.
for me to refinance? And I used to live by a rule of about 1%
Okay.
of a drop on the rate for it to make sense. But we're finding that for the amount that folks are borrowing these days, even lesser of an amount could make sense because the savings could be substantial.
Interesting.
So yeah, rates are pretty stable though.
Yeah. Well, that's
Still at an
that's
all-time low.
important. That really it's a unique situation that's occurring right now,
Yeah.
and it's positive, and we just hope that it continues. We're both in a similar, obviously the same market, but things vary depending on what's going out in the real estate market as a whole. I guess you really covered the big question I had was pre-approval, pre-qual, interest rates. One other question that does come up, working with the first-time home buyer especially, is the unknown of what happens once they found a home, the offer is accepted, inspections have been completed, and now the loan process begins. Okay, take me from the point of an accepted offer, inspections done, contracts out, contracts have been signed. So I know that's when your clock starts ticking. What happens once you receive a fully executed contract?
Very good. So for us, this whole process, first of all, will take about 5 weeks.
Okay.
From the time that you, as an agent, will say, all right, we've got this accepted offer, now you go to contract. One of the first things that we're going to do is make sure that everything that we need to submit that loan application to the processing department. So we're going to check off all the boxes. We're going to make sure the contract is there. We're going to make sure we have the correct information, vet everything out, make sure the taxes are correct, because that can change
Sure.
a transaction. We want to make sure that we've got all of the income documents to support the person's income. We want to make sure that the asset documentation is there to show that they can actually close on the loan. So that's very important. Anything else that we see that a particular borrower may have, and there's different nuances. It could be a person who is coming out of school and they don't have the more traditional 2 years of education, or 2 years of work history. So we may need transcripts from school. And maybe it's a divorced person.
Right.
So there's different, again, nuances with,
Sure.
from borrower to borrower. And as a loan officer, we want to make sure that we have asked all the proper questions and then put everything into the file so that the process can move through pretty efficiently. So first step is we'll go into processing. And they generally will go ahead and review the work that I've done as a loan officer. They will order the appraisal. So they generally will call the agent and set up a time to go in and view that home and prepare a report that can take anywhere about a week's time.
Sure.
Generally, we do need to see a fully executed contract as a part of that appraisal process. We want to make sure that the appraiser understands the transaction as well. And appraising these days, by the way, is it's a pretty interesting process now. There's a lot more eyes and ears on that
Sure.
part, and
Seen a big
and I
change in
think
that.
yeah. So sometimes people think, wow, a week's time.
Right.
That seems like a long time.
They do a
to
lot
get the
in that
value.
week. They do a
That's
lot in that week.
absolutely
Yeah.
correct. We want to make sure as a lender, if you've agreed to buy the home for X, that home is worth
Sure.
X.
Right.
So there's quite a bit of work that happens behind the scenes after the inspection, and then a report is compiled that
Right.
gets sent over to us as a lender to make sure that it's a home that we're able to put a lien on. And there's also a process where we'll have that appraisal re-inspected just to make sure everything is good. But from there, the loan application, is going to go over into the underwriting stage. And the underwriting stage is really where the person within the lending institution is crossing the T's and dotting the I's, really making sure that everything that we need to underwrite that loan is there and everything gets vetted out.
Right to the end, too. I mean, I've seen, scenarios where the week of. They're calling the employer to make sure
That's
they're
right.
still employed, and paycheck stubs, and they're really doing that due diligence right until the end.
That's absolutely
Yep.
correct. There's a lot
Yeah.
of checking and double checking.
Sure.
I want to make sure
Things
that
change.
that's
Things
right,
can change,
and they really could. I mean, I've had instances where people have lost their jobs,
Sure.
unfortunately.
Yes, I
and then
know.
we find out. It's
I
like,
know.
wow,
I
we
know.
need
It
to
becomes
make
a
a change
surprise to
here.
everybody,
So,
and then things have
thankfully,
to
it
be.
doesn't happen often.
Right,
But,
right.
but things can change,
Yeah.
so it's very important. Even once we go through the process, it can take, on average, about a month. That last week is kind of really just checking everything, make sure that what we think we know about the transaction is
Okay.
in fact that, and that we have confirmed everything.
Okay.
So it's about a 5-week process.
Okay.
It goes to the attorneys at that point for them to
Okay.
close the transaction.
Okay. Great. Great. So yeah, it's a process, but I think if more buyers, and even for the most part sellers, were aware of what kind of goes on behind the scenes, everybody doesn't like the unknown. So what seems like a really long time to a buyer wouldn't be if they were educated up front on the length of time and where the file's moving through. And I see different lenders and attorneys. Everybody handles the files differently. So to be informed from my side as well as the buy side, I feel that that's really, really important. Keeps
Absolutely.
everybody's anxiety levels like much lower.
Absolutely.
So,
I think
yeah.
most people, when they're spending $200,000, $300,000, $500,000, want to
Yeah.
know not just that they can do it, but
Absolutely.
is this a good thing for me,
Yeah.
and what's this process going to be?
Sure.
It's not every day that you spend that kind of
Right.
that kind of money, right? It's a
Sure.
big investment.
It sure is. It sure is.
The more you know,
Yeah.
the better off you are.
Information is power, that's for sure. Well, I wanted to thank you so much for being a guest on this is our first show. So I knew that you are, certainly qualified to be here. So thank you for providing. I know you're so busy, and I, know how much it is of your time to travel here and be here. And thank you for, all the service that you've done, not only for my company, but for, in the area. You certainly are a well-known individual, and you certainly, provide a very, very qualified service. So
You're very
it's-
welcome.
yeah.
I do appreciate that,
Yeah.
and I think over the years we've worked well together.
Yeah, thank
the,
you.
The amount of work that you do for the community, and I think is admirable. And
Yeah,
I'm happy to be here. It's an honor.
Thank you.
Good luck with your
Rob.
show.
Yeah, thank you. Appreciate you being here.
Open up the champagne, pop. It's my house, come on, turn it up. Hear a knock on the door and the night begins. 'Cause we've done this before, so you come on in. Make yourself at my home.